environment evolves. I think you will agree with me that the aim of the Reserve Bank is to maintain price stability, and because price changes are affected by exchange rate stability, and to try and make sure that affordability and business can operate well, exchange rate stability is a key parameter. However, it is also key for the central bank to make sure that we have financial sector stability as well. So the state of the economy is really summarized in the table before you. We have seen several phenomena in our economy. The first and most positive is the enhanced stability that continues to define the environment in which business is operating. I think you will agree with me that expectations rather than reality sometimes are much more significant. And therefore, it has been the Reserve Bank's aim to try and make sure that we anchor those expectations, to make sure that as we go forward, we continue to observe a thriving and growing economy. On that table this morning, I want to focus on the second row. As you can see there, our main inflation number at 4.4 looks a lot more decent than a lot of us expected in this room. However, what is much more encouraging is the June inflation number, because that is the main inflation, annual inflation number. But as you can see, we still are below 5% inflation in May at 4.7%. Sorry, the number is not on the table. But what's actually encouraging is that we don't see a significant uptick in ZiG month-on-month inflation. What we saw was a small adjustment in the US dollar inflation numbers, and that is significant because it actually illustrates the point that the Reserve Bank keeps making, that if you depend on a currency you don't have control over, you will have to contend with headwinds that are not local, because you import that inflation. Because globally there is an inflation uptick, we have seen the US dollar inflation creeping up. You might ask why or how has the Reserve Bank managed to keep inflation at those levels? Monetary policy has been very patient. And I know that economic agents are not as patient. We want things to turn immediately. But the national economy is a big truck, is a cognac. It's not a small car. It turns slowly. And therefore, it's important that before you start taking measures, you realize that the turning curve may sometimes be much larger than you expect. And therefore, although the measures we took as the central bank were projected to stabilize and then make the economy grow, we saw that last year in 2025, the economy grew by 8.3%, and we expect that this year it will grow by 5%. Now, let's put those numbers in context. In the region, this economy is one of the fastest, if not the fastest growing economy this past year. And we expect it will still be one of the fastest growing economies next year. What it says to you, for those of you who have deep pockets, is the place to put money is here. You will grow your returns, believe me. Now, let me move ahead to break down the inflation numbers a little bit. Now, prudent monetary policy anchored in positive real interest rates and optimal money supply and liquidity management were the anchors of what you see in those numbers. However, I want again to emphasize that because of this stability, not because of the intervention of the Reserve Bank, we have seen the exchange rate also stabilize. And we achieved that as a nation by adopting a floating exchange rate and accumulation of foreign currency reserves that we were very graciously been allowed to do through the royalties that we accumulate in kind and through other reserve management programs. I want to emphasize that the Reserve Bank does not interfere with the setting of the exchange rate. The Reserve Bank interferes with the framework to make sure that economic agents, as they conduct their business, that as the economy continues to evolve, economic fundamentals established with this exchange rate is going to be. So, I wanted to give you this chart to show you the disinflationary path that the economy has taken. And I think not to ever emphasize the detail there is the interesting part. That even with the geopolitical tensions that Linda was talking about earlier, we have seen our economy continue to be resilient. Yes, you can argue it's coming from a low base. It doesn't really matter. The most important thing is that it is growing and that the fundamentals are right. The low levels of annual and month-on-month inflation confirm the policy thrust and has effectively eased inflationary pressures and anchored inflation expectations. I've talked about expectations earlier, I mentioned them, but I want to emphasize that sometimes be careful what you wish for. A lot of us wish for the exchange rate to depreciate so that those loans that we took will be expanded, but it's not going to happen. So let me emphasize that the era of speculating on currency is over. Now, we have seen that across the world, central banks have either hiked interest rates or have maintained them. But the Reserve Bank has carefully signaled a stabilizing, softening phase by lowering, and I'm going to talk about that a little bit later on, by lowering the bank policy rate by 5 percentage points. But before I do talk about that, let's talk about the exchange rate a little bit further. The Reserve Bank adopted and implemented the willing buyer, willing seller rate. And this is the mechanism through which the exchange rate was floated. But the Reserve Bank is going even further to put together a digital platform so that economic agents can interact freely without the need for the Reserve Bank to collect data, post-trading and put it on the website, because that's creating a perception that the exchange rate is being set by the Reserve Bank. Now, this digital platform is meant not only for transparency, but also to give economic agents real-time data they can use in their day-to-day activities. The system so far has ensured foreign exchange availability and market clearing, which has stabilized exchange rate and prices. But let me go back a little bit, and I want you to